Bitcoin is better money, right? It's a blockchain application for digital gold, or as Michael Saylor says, digital property. That is the future of money. Okay, great. Ethereum's different. Ethereum is the future of global compute. As soon as the ETFs were approved, we're going to be up only.
Significant cryptocurrencies rallied this week amid multiple potential catalysts, including net solid inflows into Bitcoin ETFs, notable new registration filings for spot Ether ETFs, and an anticipated Bitcoin halving event in early April. BlackRock and several other ETF providers have submitted applications to the SEC for a place in Ethereum ETF. However, there are doubts regarding the agency's approval of these ETFs as the May deadline approaches. Speaking on this matter, Morgan Creek Capital CEO and founder Mark Yusko highlighted that he had been certain for a year that once they set their sights on the Bitcoin ETF, it would not only be approved, but would likely be the first. On March 19th, BlackRock revealed that it is preparing to offer a fund through a partnership with digital asset tokenization specialist Securitize. The fund will be based on the Ethereum blockchain and traded under the ticker BITL. Meanwhile, the U.S. Securities and Exchange Commission has reportedly issued subpoenas to Ethereum Foundation entities. Ethereum could be about to break massively above recent highs following announcements that BlackRock is launching a blockchain-based fund. Moreover, the news of the fund comes amid hopes that the SEC may approve a spot Ethereum ETF in May. Crypto gamblers are placing bets on whether the United States Securities and Exchange Commission will approve a spot Ether exchange-traded fund before May 31st. The approval timeline for the ETF hinges on the powers that be, with Yusko suggesting that BlackRock's influence could expedite the process. He metaphorically referred to their influence as having a bigger stick compared to the current SEC chairman. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
They are the largest asset manager in the world. I told people for a year that there was no question in my mind. As soon as they announced they were going after the Bitcoin ETF, not only was it going to get approved, they were going to be first. Right. Now, they decided to crown them all at the same time, but and look, Bitcoin has, BlackRock has applied for an ETF in Ethereum as well. I think the challenge now is who has the bigger, stick, shall we say, and everything is political. Appointments of these, unelected people are by the current administration that happens to appoint them. It happens to be an election year. So, look, Ms. Warren is pretty anti all of this. Why? Well, my thesis, I won't put words in her mouth, but my thesis is you look at her largest campaign contributors, they happen to be large financial institutions that have a great deal at stake if they are disrupted. So it's not surprising to me that she would craft legislation to slow down the disruptive technology. If BlackRock really, really wants it to happen, because I think they have a bigger stick. I think they do have a bigger stick than the current chairman. Let's say, I think it's highly unlikely before the election because the current guy was appointed by the current administration. Right. And so he's going to do what he has to do to stay. Now, if the administration were to change in November, how quickly would they replace, the SEC chairman? Probably pretty quickly. How quickly would that person, do I think the ETH ETF is high on the agenda? No, I don't think it's at the bottom, but I don't think it's the first thing they would do.
The approval of Bitcoin ETFs has proven to be a game changer for the digital asset market, setting the stage for broader institutional adoption. On Thursday, March 28th, all 9-spot Bitcoin ETFs recorded a combined inflow of $178 million, marking a significant turnaround. Notably, there was a major decrease in outflows for the Grayscale Bitcoin ETF, GBTC, which saw a 60% reduction compared to the previous day. Yusko highlighted the importance of the financialization of the market, drawing parallels between Bitcoin and gold as fundamental stores of value. Reflecting on the history of finance, he argued against bailouts for failing institutions and stressed the inevitability of bumps and hiccups along the path toward financial evolution. Now, let's redirect our attention to a video.
I think we've seen 12-ish billion of net inflow over the 8 weeks or so. I think that absolutely can and will continue. Do I think it is likely to accelerate, not decelerate? Yeah. And the reason is we still don't have all of the wirehouses and independents with full approval of the ETFs for their advisors. We still don't have all the education resources. There's going to be volatility, right? I think the volatility that we're experiencing now, talked about this, right after Chinese New Year, every year after a big year. So 3 out of 4 years in the cycle, so not on the down years, but on the 3 up years, you get 2 drawdowns in the first half of the year. One around Lunar New Year, because people in China need to cash out to fill up their red envelopes with cash, with renminbi. And that happens like clockwork, and it's a big place. Second is around tax time for the US. So kind of, Ides of March through the first week of April, as people realize, oh, geez, I got to pay taxes on all that crypto that I traded last year because it was up, 155%. And there's natural selling. And so that in the short run swamps the inflows. You got the added challenge that GBTC made a decision, which I don't fault them for in terms of being money grabbers. You got a captive audience, most of which came in at 6, 8, 10 grand Bitcoin. So they have huge capital gains. If they sell, they're going to incur big taxes. So it was highly unlikely they were going to sell right away just to save 100 basis points. But if it was in a not-for-profit account, an IRA, a retirement account, those were going to get sold. And that was bang, 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 the first few weeks of withdrawals. Now there's some arbitrage going on out there that people don't pay attention to. Interesting thing is financialization of this market is good in so many ways, right? I said all along, if the only purpose of Bitcoin is to put it on your ledger and bury it in your backyard, we can all go back to our day jobs because we have that. Sure. That's called gold. And it's been good for 5,000 years. But what people don't think about is that gold isn't just the few bars or coins that you stuff in your safe at your house as running money. It is the base layer of money. Every central bank in the world owns it. They issue currency on top of it. Mm-hmm. And the same thing about Bitcoin. If Bitcoin wants to be digital gold, digital property, right, eventually take on real estate as the great store of value, then it needs to be deposited. It needs to be lent out. It needs to be borrowed against. It needs to be financialized, meaning people can borrow against it. They can decide if they want to rehypothecate it or not. We need rules and regulations like the banking industry has. So the future of finance should look like the past of finance, and violators like Bear Stearns and Lehman and others should go bust, and we shouldn't bail them out, by the way. But so ultimately, we are on the right path and the right trajectory, but it's never a straight line with no bumps or hiccups. You know this because you've been on the street a long time. If you want to acquire a large amount of an asset, the oldest trick in the book is you don't just start buying it. You actually go short some.
Mm-hmm. Yep.
In fact, you spread a rumor saying you hate that asset and you push the price down so you can buy it at a cheaper price.
Despite growing anticipation, the path to an Ethereum ETF remains to be determined. Reports indicate that the SEC has initiated legal proceedings that could impact Ethereum's security status, adding obstacles to the ETF approval process. Additionally, market dynamics have shifted, with crypto market maker GSR revising its estimate of a spot Ether ETF approval in May to a mere 20%, down from the earlier estimate of 75% in January. We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.